There we go. I remembered this time. So remember, the 203K loan is fundamentally an FHA loan, right? And so they have to qualify for an FHA. Currently, the FHA minimum credit score is 600. As this is an FHA loan, this is only for owner occupants. Something I also have to talk about here is that Fannie Mae has their own version of this product, and it's going to be, there's a lot of little tiny differences between the Fannie Mae and the 203K. But we don't really need to go over all, you guys don't need to know all of these little tiny differences. If we cross that bridge with a buyer, we'll certainly tell you them, but this is just so you can have a general overview. I'll try and keep this class to an hour or at least under if possible. But if we're using FHA, of course, it's only for owner occupants. They have to use 3.5% of the purchase price as a down payment. And I don't know if you guys sat in my class last week, but we can do 1 to 4 unit properties. Remember, we were talking about investment properties, and you can do renovation loans for a 4, 2, 3, or 4 unit property. So that's a really, really nice thing to be able to do, especially if you're going to, a lot of times these multiplexes don't, they aren't always taken care of well because frequently the owner doesn't live there. So he's keeping them at a minimum standard. And you can always use a renovation loan to get those things a little bit more bulletproof so they can hold on a little bit more of a beating if depending on the tenant that goes in there. So we cannot use them for condos, right? And so this is all supposed to be one sentence here, but you can rehabilitate an existing structure that has been completed for at least a year. So it has to, the building had to have existed for at least a year. The house had to have been built for a minimum of a year before using a 203K loan. Also, if you have any questions, feel free to throw them in the chat box and I will get to them when I look at them. So get to them when I see them. So, okay. So we are going to try to accomplish 2 goals with 1 loan, right? So renovation financing allows a borrower to purchase or refinance a home that is in less than ideal conditions and make improvements immediately after closing. So what we do is we close on the loan and then the funds get distributed to the buyer and the contractor and they do all of that post-close. So you guys are out of the deal as soon as you close, and then the renovations will get done, and needs to take at least 6 months, and we'll get to some of this. So the cost of the renovation loan, the renovation is rolled into a 30-year mortgage, which makes this a lot more affordable than having to come out of pocket for all of these types of expenses, right? So the home, this is one of the most important features of a 203K loan. Just move some of this around here for myself. So we can close with some or none of the utilities or the systems being on prior to closing. So you guys know, if you've done enough FHA loans where the property has to have a refrigerator, a working refrigerator, it has to be move-in ready. It has to have working refrigerator, working appliances, has to have floor coverings, carpet or tile. It's got to have the doors and the windows all have to be in place. The air conditioning unit has to work. The heating system has to work. All of these things to create a minimum standard for a move-in ready home. Well, the really, really nice luxury of these types of properties is that they don't have to be on, so these things don't have to be on within, so for them to be able to move in. So this is a really nice feature of these types of properties here. So Katie, they basically have 6 months for the repairs to get finished, and then they have to move in pretty soon after. Again, if this is an FHA loan, it has to be their owner occupant. So they can't just buy it as an investment property that way. They do have to move in. They'll have to occupy within, I think it's 60 days after the renovations are finished. So this is what the process is. They'll do an application with us. Yes, we will run their credit just in case you're going to ask about that. Buyer has to be able to qualify for an FHA loan. And also the house has to qualify, meaning that it has to be built for at least a year. So we're going to get an estimate from a licensed general contractor or a HUD consultant. Then we'll get an executed contract. Appraisal will get done. We'll go through underwriting and close just like we do anything else. We'll distribute the funds, and then the work begins, and then they'll come back around and do another appraisal afterwards. Should have added a number 10 there. Sorry. So, Katie, they do need to get an estimate, yes, from a licensed general contractor for sure. So there's two types. There is a limited, and then there is a standard. We're going to talk about the limited first. Also, Fannie Mae has the same sort of standards with this, where, so we'll get to that in a second. So this is intended to facilitate uncomplicated rehabilitations and/or improvements for which consultants, engineers, and/or architects are not required. Okay. So the total rehabilitation cost must not exceed $35,000, and there's no minimum on this. So, but they cannot exceed $35,000. So they may be used for minor remodels and non-structural repairs, and the HUD consultant is not required for the limited. Okay, let's go over a few things here. As far as the $35,000, best case scenario that they keep them to $30,000 because there's going to be extra closing costs on a 203 loan, a 203K loan, and so they are going to have to compensate for that, and that those extra closing costs will occupy the rest of that $5,000. So depending on the house, if it's a pretty basic 3-2, 1,500 square feet, and they want to, redo both bathrooms and a kitchen and do floors and paint inside and outside, then, that can probably get done for $35,000 if they keep everything, not too luxurious, if they keep it basically entry level. So something to take into consideration. We're going to go a little further on that. So these are all of the things that are going to qualify for this. So you can do roofs. Myrna, yes, we can do roofs. Gutters and downspouts. You can repair, replace, or upgrade the HVAC unit, because remember, that can be broken, doesn't need to be operational. We can do plumbing and electrical systems, replace the floors. We can do minor remodelings such as kitchens and bathrooms. So anything that does not require structural repairs. Remember that structural repairs are the separation between a limited and a standard ultimately, right? But they can paint interior and exterior. They can do weatherization, including storm windows and doors, insulation stripping, etc. So these are all pretty basic repairs, basic minor level repairs here. And again, there's nothing structural. We're not extending the slab and going to be extending the square footage on the house. So just keep that in mind there. So the purchase and the installation of appliances, right? So they can buy appliances with this as well. Remember, they can move in without the appliances working. And so as long as they spend another $5,000 on repairs elsewhere, anything after that can go to appliances. Okay. I don't know why they have that number, but I guess they don't want you just buying appliances to use this loan kind of thing. So you can make improvements for people with disabilities. You can add decks, patios, or porches. If you have an unfinished basement, not that we have that in Florida sometimes, I guess some places, you can finish and remodel a basement as long as, again, it does not involve structural repairs. Window and door replacements and exterior. Oh, excuse me. I'm sorry. These are eligible repairs. Yes. Okay. So window and door replacements and exterior wall residings are all eligible. And if there is a septic system or a well repair or replacement, those are eligible as well. These are ineligible repairs. Thought we were ahead of myself. So any major rehabilitation or major remodeling, such as the relocation of a load-bearing wall, would not be able to be done with the limited. They're going to have to go above that 35. Or they don't have to go above 35, but they're going to have to go to a full standard. So if they're going to use any new construction, including adding on additions or extending the slab and then expanding on the square footage of the home, if there's any structural damage to the home, that is ineligible as well. Repairs, including requiring detailed drawings or architectural exhibits, any landscaping improvements, and any repair improvements requiring a work schedule longer than 6 months, right? Because the work has to be done within 6 months for a limited. Anybody have any questions so far? You type them in there if you want. Okay. Moving right along. So that is the limited. We're going to talk about the standard now. The standard is where you can play jazz and do a lot more here. So the minimum cost repair is going to be $5,000 on the standard, where the limited did not have a minimum credit, a minimum repair cost, right? But one of the main differences is a HUD consultant is required for this type of a loan. A head consultant is going to basically oversee the entire job. You'll still have contractors, but he is going to oversee the entire project, basically the HUD consultant. So if you wanted to increase a 1-family structure to a 2, 3, or 4-family structure, you could do that with this. So again, if you have a really big 1-unit property, you want to turn it into a duplex, 3-plex, 4-plex, you can, which is a really, really nice thing. If you want to decrease a 4, 3, or 2-unit property into a 1-unit property, you could do that as well. Reconstructing a structure that has been or will be demolished, providing, and this is important, the complete existing foundational system is not been affected and will still be used. So they have to use because if anything other than this, we're talking really a new construction property, but they can wipe the entire slab and rebuild right back onto it, basically from the ground up. They can make structural alterations such as the repair or the placement of any structural damage. And this is where all of this comes in. This is where the HUD consultant comes in and using architectural drawings to really rebuild almost all of the house, right? So Marina, can you use this loan as an investment property? So a 203K is an FHA loan, and you would have to use this one as an owner occupant. But if we use the Fannie Mae version of this loan, then they could buy this as an investment property. Loan to value is going to increase from there, though. Sorry, loan to value is going to decrease. They will need to use a larger down payment, because we're talking with these 203K loans, they can do this with 3.5% down. So the barrier of entry is really low. So, okay, structural repairs are approved. So the HUD consultant, every standard 203K above that 35,000, or just any standard to begin with, is going to require the HUD consultant. This person draws up all the paperwork, works with the buyer and the contractors to get an estimate before the appraisal. Right? Because what they're going to do is they're going to show this property to the appraiser. They're going to hand them all of this documentation of all of the upgrades that they're going to do to the property. And then the appraiser is going to take all of that into consideration and then give a higher value on the home that they would have if it was in its as-is condition. Okay. Welcome to those guys who are just coming in. So when do you need a 203K? So you need when the repairs are obvious on a property, right? Where you can walk in and you can say to yourself, well, this is not move-in ready. You as the realtor can see that this is going to require a lot of work, more than just a couple of basic touch-ups, okay. So if you have an appraisal that came back, not as is, but it came back as subject to, we can convert this FHA loan to a renovation loan to compensate for this. Because let's say it's subject to the roof being replaced, or it's subject to a couple of the appliances, or not all of the floors are in, or something like that. And you have a seller that says, I'm not fixing it, I'm not paying for anything, they're buying it in its as-is condition. So if that happens, we can just simply convert this from a traditional FHA loan to a renovation loan. It's going to extend the closing for sure. And we're going to have to really start a different process at that point. But it's very worth doing. It saves the deal for sure. And you can also use a 203K loan when you want to sell the vision of a property. Got a couple of other slides coming for that as well. So who can benefit? Home buyers can benefit because they can purchase homes in less than ideal condition. They're buying them in as is, and they can address these problems immediately after closing. And homeowners can because they can refinance and they can make upgrades or modernize the house and expand and increase the value, whether they want to stay or list it. You ever seen that show, Love It or List It, when they re-renovate their home and then decide on whether they want to keep it or move it to the other one. And because doing this on a credit card is just crazy. The interest rates would be just way too expensive for this. You could use a home equity credit line, but they're not going to allow, it's not going to be the same thing as a renovation loan, but then they would be on their own for that. So real estate agents benefit also because you guys can sell properties that need repairs and help potential buyers envision the remodeling possibilities. So this is where you start selling vision, where you walk into a property and it's got that green kitchen and a yellow bathroom and they go, oh my God, what did the last owner do to this place? And you could say, well, although the last owner, hasn't upgraded the property in 20, 40 years, if we use this one particular type of loan, we can make it work where we can put all of those renovations into the loan. If you can get the house cheap enough, because remember, it has to come in under appraisal also, including all those repairs. So paying retail for the house may not work exactly for this. So you're selling a vision, what the house can be, not what it is, and then you can just let the buyer create their own dream home, So some of these negative listing notes you'll see on the MLS, they'll be like REOs, short sales, HUD properties, anything that's as is, or if it says cash only. Certificate of occupancy is the responsibility of the buyer. If you see any of these types of things, all of these notations can be fixed by simply using a renovation loan. Now, I know that a lot of listing agents are really just going to want to ignore this because they don't want to have the mortgage. They want an investor and they want a cash deal. They want to close and they don't want to have to go to a renovation loan or they don't want to have to wait for a renovation loan to close. But if they were creative enough and maybe they're just not sure that this exists, then we could definitely do this in this exact kind of a way. Hang on, guys. More people coming in still too. Okay. And yes, for all you folks who are still coming in, keep in mind that this is being recorded. You can always go back and catch the beginning of it if you wanted to. And I'm going to mute you guys. Okay. So you're showing listings to a buyer and they keep saying, yeah, I like it, but it looks okay, and you can't get them to make an offer. You can sell the vision using this type of a loan product, letting them know that, I know that at your purchase price at $180,000 in Davenport, you're going to have less options. The market just doesn't have what we need to provide to them as far as an option. So we have to get a little more creative and say, but what if, I know that it's not perfect the way it is, but what if you had a brand new kitchen in this house? What if you could do the kitchen and both of the bathrooms and have them both brand new? And we did the floors in here, painted the interior, and just kept it at that. There could definitely be enough to brighten up a house for sure. There are plenty of house flippers that do a lot less than that. I'm sure you guys have seen that before. So this is what it ends up looking like. You walk into a house and it doesn't look great. Not that this is a terrible kitchen, but it's older. It could be remodeled, right? And it's not gigantic or anything, but all they're really doing is they come in here. At least in this particular case, it didn't even look like they changed out the cabinets that well, but they do the sink, they did the counter. Microwave probably could have gone up here. This is a really low priced renovation here, but it definitely looks better than the floor that's there. And you can at least say, give them an idea of what this could potentially look like, Here's another one with a bathroom. These are all builder grade model, all basic base model stuff here, Formica. There's not stone. So the sinks are sitting on top of the counter, basic toilet, basic floors, and they come in a little bit nicer, spruce it up a little bit more. And then, new vanities. I don't know if those are the same lights. Maybe they are. Doesn't matter. But, at least it looks a lot nicer. They can have something that can feel good about it, at least, So let's talk about the contractor for a little bit. So the contractors are going to have to complete what's called a contractor's questionnaire. We will need a detailed estimate. I have an example of this coming where each line must have a price and must be itemized. And then it must be signed by the contractor and the client. We need a copy of the contractor's license, and they need to have general liability, and we would need to see a copy of their liability declaration page. Also, they would need to fill out a W-9 website to the IRS. Those are easy to find online also. We would need a copy of the contractor's driver license. And if he has workman's comp insurance, we would need to see a copy of that. If he is exempt because he doesn't have any employees, we would need to see his certificate of exemption for that as well. Okay. So just a little info. Lily and I have done a bunch of these through the years, and I can tell you that not all contractors are built equally. Not all of them are really good at documentation. They might be really good at flipping a bathroom or a kitchen, but they may not, or they're not all built equally as far as gathering all this documentation, getting it to us. These guys can kill a deal for you if they do not have their act together, because they can push a closing date. And because we cannot close without having some of this, they'll get us the bid for sure, because they want the work, but getting some of this other stuff, maybe not as easy for them. So if you know any contractors that have done 203K loans before and understand the process, that is definitely something that you would want to reach out to them and say, I have this kind of a deal. Do you want to come onto this deal with me? I'm sure they'd be grateful for the business, something to keep in mind though, because if they can get us all their documentation, sure, we can close in 45 days. But if not, who knows, so this is what an estimate looks like. Got material, labor, and then all of this comes down to bottom figures basically. So we need to see all of these things itemized and priced for exactly what it is. Here's another one, some chimney repair, all these other types of things, as long as they're detailed and as they are itemized with labor and marketing materials. I'm not marketing materials. Material costs, labor costs. My head in marketing constantly, So one of the benefits to the realtors, the great opportunity to bid for value add buyers. I'm sure if you've been a realtor long enough, you've worked at least one buyer that tells you that he is not paying retail. He wants a deal, and he wants you to go find him a deal, right? So this is one way that this could happen. So you attracting potential buyers looking for fixer-uppers. And so look like this, going down here, you could provide somebody with immediate equity sometimes. That does not mean that they are always going to have equity after closing. We want to really make sure that we get that clear. Also, it could happen. It has happened. It just depends on what the initial purchase price of the house is versus what the improvements are. But this is one way to spend less time driving buyers around, because they can simply just walk into a place and have the kitchen the way that they want it. Again, perfect for as is and REO properties. And let's say you work with a buyer, and in 2020, that they have updated their home, that that if you're going to help them sell that home again in 2024, you are selling an already updated home. And, it's going to be a lot easier to show that property, and it shows a lot better because, the kitchen's only done 4 years ago versus them moving in and just keeping the Formica and just keeping it the way it is, right? So it helps everybody think outside the box, right? Because homes can be knocked down and rebuilt using part of the existing foundation. Homes can be raised and renovated to meet new FEMA requirements. Homes can be made larger, and you can add on additions. I know that there are definitely real estate investors that look at things in this model, right? Where they say, okay, what is the square footage retailing for in a neighborhood, and what am I able to get that property for as far as the square footage, dollars per square foot we're talking, right? And so if the cost to build or extend the slab and then is going to compensate for the amount of, if there's a really good spread between those two dollars per square foot prices for what they're getting it for and what a retail is for, and if they can build in there and definitely get a decent amount of equity where they can push that to a decent flip, that is something that I know a lot of people are interested in as far as when they're examining neighborhoods and what they're getting houses for. Now, I'm not saying you can flip houses with a 203K loan. You can't, because they're owner occupant. They got to live there for a year. But so something to take into consideration if they are actually looking at a home that's in really, really bad shape. And then you could put a decent structure in a decent neighborhood where you know that those dollars per square foot can really get you somewhere, you know? So another way we have to think outside the box is we have a really low inventory. I just pulled this off the market pulse for Aura today. So at certain prices, we have to get creative, right? If we're actually going to get a deal to the finish line, you know, just because we have a motivated buyer, that doesn't mean that they're actually going to convert into a sale. And 203K gives us other options that we didn't previously have. I mean, we're up almost at around 9,000 here, 8,700. We are down below 6,000 as far as the inventory here. This is a historical low as far as the inventory goes, guys. And so remember, so much of this inventory is compressed below the median sales price. So sure, if they want to buy a $375,000 home, yeah, they could, and they'll have less competition on that. But there's also, you know, less people that can afford a $375,000 home. If they're looking at 180 to 200 or 150 to 200, that inventory is really, really compressed even more, which is what's pushing up the median price. Because if you watch my morning videos, you know that they're either going to go up in price because, you know, they have this family need, if their debt to income ratio can support it, or they're just out of the market altogether, you know. But it doesn't mean they don't want to buy. It just means that the market doesn't have anything to provide to them, or at least they haven't found anything that they like. But when we can show them a creative option that says, listen, guys, even though, you know, it does have a green kitchen, pink bathroom, all that, we can still convert this, you know, renovate this entire house to make it fit your needs, as long as you like this neighborhood and the neighborhood is fitting, you know, what you want. You know, because otherwise they're really just buying into somebody else's design cues, you know. So again, if a listing agent is advertising a cash only property, it limits the potential pool of buyers, and the listing can sit on the market longer than necessary. When if they were to just say, listen, rent a cash only or renovation loan, you know, because, you know, people may not understand that an FHA loan is a renovation loan, but you guys are super smart realtors and you know this. And so you can say, look, just because it says cash only, that doesn't mean you can't show that to your buyer if they're approved for a mortgage, you know. And properties that have water damage, termite damage, mold will prevent FHA from closing traditionally. But all of these are things that we can close with a 203K loan, guys, you know. So some of the common misconceptions of a renovation loan is that they are hard to do, but it all comes down to the people that you work with. So Lily and I have a lot of experience doing renovation loans. We've done dozens of these through the years, and we know the process. And so that's why I was saying it really depends on who the contractor is. If they're good with paperwork, then they're good for this kind of a deal. If they're not as good with the paperwork, who knows, really? It could take, you know, it just depends on when they get that to us, and they could postpone a closing depending on, you know, ... And so we will ask for a 45-day close. Some people think that it does take months to close a renovation loan. It does not. However, we are capable of doing it in 45 days, even though there is a few more steps involved. But it's really not that bad, honestly. So, okay. Almost at the end here. Do you guys have any questions right now on what we just went over? I know that was a lot of info. We are recording this, so you can go back and watch this again if you want. But you guys can unmute yourselves if you want to ask more questions, or you can type it in the chat box if you want.
Hey, Brian, this is Katie.
Hey, Katie.
Hey, I got a ton of questions. My first question is, how does the contractor get paid?
Contractor. Okay. So what happens is we close, the funds stay at the title company and they get distributed from there. The title company will issue distributions from there, or hold on. Mortgage company will issue distributions, and they will issue them to the contractor and to the buyer together, basically. And so they will do the work and then, you know, keep the distance, the difference. You can see the difference on their bid as of like how much they're going to make, basically. And that's why the mortgage companies want to see this, to know that they're not gouging the buyer and charging, you know, ridiculous prices like a hospital would or whatever. Anyway,
Gotcha.
Comment.
So when you say it's just distributed both to the buyer and the contractor, so the contractor within their contract is writing up like their draw schedule and then it's being released that way. But then you said the buyer, is this like in the case where a buyer wants to purchase their own tile or their appliances and stuff like that?
So, well, they will select what they want. They'll choose what they want. But keep in mind, I don't know if this answers your question or not. Forgive me if it doesn't. But like the buyer cannot do any of the work themselves on
Correct.
203K loans. Even if they are contractors themselves, they cannot do any of the work.
Okay.
Okay.
So, but you said they're distributed to the buyer and the contractor. So I guess that's where
Yeah.
I'm confused when you said it gets distributed to both.
It gets distributed to both basically. So each has like, the one's doing the work and one owns the home, and the homeowner has the buyer is the one getting the mortgage. So it's getting distributed to both of them. So it doesn't get too confusing, I guess, even though it feels like it could be getting more confusing for sure.
Yeah, I guess that's confusing. I mean, I can understand it, but like if the buyer is purchasing like the appliance, they're picking them out. Or does
They
that
would
have to
pick
go
them
through
out.
the contractor? Okay.
No, buyer picks out all of the stuff that they want, all of the appliances that they want.
Okay. Gotcha. And then do you guys, I mean, I know your guys are up in the Orlando area. Do you guys have recommendations for contractors? I'm down in South Florida.
Not really. We've
Okay.
had some that we've worked in the past. We haven't done one of these in, I don't know, the last one that we did less than a year, maybe almost a year ago, probably. Not that I remember. If Lily were here, she'd probably remember of another one that we did. But markets have changed in the last couple of months. So best case scenario, try to find a recommendation from somebody that's either done this or ask the contractor if they've done it before, or if they can, you can just use this. I mean, I can give you a list of everything that they need. And then you can show that to say, just, can you provide this? Because I can't get you on the deal unless you can,
Right.
there's not
And
really
so,
like an approved list of them ultimately.
gotcha. And then just kind of, I mean, I know you guys are on the mortgage and lending side, but kind of from the realtor perspective, right? So, some of the stuff that we're seeing down in South Florida, if there is a home that needs renovation, days on market's longer, it's easier to work a deal, but everything else is going like hotcakes. So, to be able to present this to the buyer and then the listing agent, what is your recommendation of how we would go about the process? I'm just trying to think of, when do we get the contractor in to bid the
Sure.
property?
So before we go to contract, you want to have all of that basically. I would let the listing agent know that this is what you're intending to do. And you're going to have to make a time for the contractor to come see the property. They'll come do it. They'll give a bid. You'll need to submit that bid to us. And then we want to make sure that there's the contractor, somebody that we can work with. And then, as long as you guys can come to a price where we think that all of the numbers will fit in, because keep in mind, if the seller has a home that is really, they're asking top dollar for, and it needs a ton of work, even if you end up, using the full version of the 203K and you need 60,000 worth of renovations, and that all those renovations will only end up equaling the amount that they were even asking for, the numbers don't fit in ultimately. So the numbers need to fit. You need to get the price down to make the renovations fit. And we can go a little bit above what the prices are selling for in the neighborhood if we think that the upgrades will, account for that. But it's important to understand that the geometry of the numbers, so to speak, if you know what I mean.
And I guess my other question is how is this like applying for a different loan, or if someone is FHA already and say, I'm sure
FHA
many
already.
people are, okay, so people are probably already experiencing this and like, oh gosh, this market's really tough and it's been months. So if they're FHA already, do they already qualify for a 203K?
They do. A 203K loan is an FHA loan fundamentally. So look like this. If you see like the K here, like a traditional FHA loan would be like a 203B. That would just be a regular, residential loan. If it says C, it would be like an FHA for a condo. K just means renovation loan in their code, in their internal code, so to speak. That's all it is. But it fundamentally is an FHA loan for sure. And they can come in 3.5% down, same debt to income ratios. And it's it can work. It can definitely work. And it can work really well if your buyer savvy and wants to buy a 2, 3, or 4 unit property for sure.
For sure. Thank you.
Yeah, sure thing. Guys, anybody else have a question? So Maria, I hope I answered your question a moment ago that I don't really have a list of contractors. If Lily were here, she might recommend somebody, but it's only people that we've done a couple of deals with in the past. And I don't know if, if they're still good contractors or not, or where they are. So you definitely want to have some sort of a qualifying conversation with them. Ask them, because they have to be licensed. If they're not licensed, then the whole deal will fall apart. Because what will happen is we need to go get a new contractor and then another bid, and then it slows down our contract time. So I don't know Pat Construction, but if you've used them before, go for it. Sure. I can't endorse or not endorse them, just based on not knowing them. So anyway, guys, I do this little video in the morning. I don't know if you're catching it or not. It's on the My Agent page. I'll talk about the mortgage world and the marketing worlds. I try to keep it under 4 or 5 minutes, just so you can get a quick in and out little update on the day. I try to give you guys some topics to talk about, any talking points about the market. I will talk national data. I won't always talk local data. Sometimes, I'm in Orlando, but I know, La Rosa has agents in California, Georgia, Miami, Tampa, all over the place. So it's tough to talk local data. I don't want to try to bore them too much. But it's something to take a look at. I put a little bit of effort into that. I'm liking it. If you guys have any topics you think you want to hear me talk about, I'm happy to expand onto those. I've been doing these classes every Tuesday ever since the kids went back to school. So if you have any other things you want to any other classes that you want to hear about, I'm happy to develop those as well. We've got about, 13, 14, 15 classes that we do. And yes, I'm not sure who that is, MLS to closing. But yes, we can use a conventional loan, and then we can use conventional loans for renovation loans. And they can use them to buy investment properties for sure. I didn't include that in the presentation. I don't want the presentation to be too long. I try to respect your time as commission salesman, and I only want to use as much time as I really need to explain any of these concepts to you. Yes, the renovations get added into the 30-year loan, and it is amortized over that 30-year time. But there is a VA loan that does renovation loans. However, I don't think that Lily and I have done one of those. So if you have one that wants to use a VA loan, I'm happy to explore that option with them, Brenda. So if you have not been able to catch my videos in the morning, they are all backed up on YouTube here. Feel free to follow me on Instagram. I post some things on there sometimes. There's a couple of resources there for you as well. As time goes on, I will add more. I have some other ideas for some more sliders on there on Instagram. I also do a Facebook ads class that I've been doing every Monday for the last couple of Mondays. We've been doing basics, and then we're going to start to get into a little bit more complicated stuff in the next couple of weeks. And so if you guys have never run Facebook ads, you may want to sit in on those, because it is certainly one of the fastest 0 to 60 times to expanding on your business. I got a website as well for LilyDeMarie.com. I built this website myself. I'm very proud of that, right? Just sort of, it's not the best website in the world, but it's not bad either. This is just a picture that you can come in here, click on loans, and then look at some of the loans that we can do. We have a little basic info. There's calculators there. There are resources where you can show your buyer all the documentation they need, and a couple of other resources for realtors too. Other than that, this is my contact info, phone number, email, LilyDeMarie.com. If you're going to have anybody apply online, it would be unionhomemortgage.com/LDeMarie. We run everything through Lily. If you're not on list reports, you definitely should be. It is a ton of marketing materials that are free to you guys for a service that we pay for you. Anytime you have a listing, it'll automatically generate the marketing materials and send them to you. Like if you want to do an open house for somebody and it's not your listing, I can generate open house flyers just for you personally for that one house. It has a lead capture websites, automatic text messages, and a bunch of other toys in there you're going to want to know about. If you want to get on here, or if you want to get on the mortgage app that we have as well, I will need all of your contact info. I'll need your headshot, your social, and your KV Core or whatever IDX website that you guys use, because we're always going to push your buyers back to you, no matter what. If we're going to motivate your buyer to look at houses online, we definitely want them looking at them on your website, because we don't want them going to Zillow, of course, right? So, okay. I don't really have too much more for you. If you guys have any other questions about renovation loans or about anything else, about mortgages, about anything else, doesn't have to just be about renovation loans. I'm happy to answer any of your other questions if you have, guys. You can unmute yourself and just say it verbally. You don't have to type it if you don't want.
Hey, Brian, it's Katie again. Really quickly,
Yeah.
you were talking about the 203K loan, and then I clicked myself out of Zoom by accident, and I think you were mentioning something about a renovation, property that needs more renovations. Was there something else you said about that?
I don't know.
Or you're just saying that's ineligible?
Let's see. Let's go back a couple slides. So, okay. When we're looking at the limited version of this, there are eligible and then there are ineligible repairs.
Right.
So remember, if it's anything structural, we're going to need the standard version of it. So basically anything that's like a new construction, or if we're extending the slab and adding square footage to the home, if we're adding a room or anything, that's not something we're going to be able to do on the limited version. We can on the larger version.
But what do you mean by that?
Oh, okay.
That's maybe what I missed.
Yeah, no problem. So there's a standard, and then there's, if you're looking up here, it's going to be a standard or a limited. So the limited is going to be less than 35,000. If we go above 35,000, we're going to have to use the standard version. I say full because it used to be called full and whatever the other version of it used to be. So anyway, they renamed these a couple of years back. So the standard is the one that we would use if we are talking about like a house that, you know, so look like this. You can, if you see a house that's like been demolished, or it's like condemned, or it's almost down to its foundation, we can still build right on top of that foundation. We can wipe the whole slab clean and then start all over again, as long as we are using the complete existing foundational system.
Okay.
So with these types of things, there's a bit of a difference, because what allows this to happen is that with this standard, we're using a HUD consultant, and we're going to be able to use things that have like, you know, like architectural drawings and things like this, which are going to need to be added in. We're going to have those if they're going to rebuild from the ground up. But when we're eligible, when we're using a limited version, we're using the eligible repairs. They can do basic stuff like roofs, HVAC systems, plumbing and electrical systems, flooring, kitchen and bathroom, and, you know, painting interior, exterior. None of these are really going to require any load bearing walls or any structural repairs, you know. So let's say cosmetically a buyer just walks in and says, oh, I hate the kitchen. I love the neighborhood. I love the location. You know, I love the school system that my kids are already in, kind of a thing. You can say, okay, well, even though you don't like cosmetically how the house looks, we can do the floors again. If you think it's just the floors, you can redo the kitchen if you wanted to, you know, as long as it's not like, I want to add an addition to the house, or I want to dormer it and go add a second floor or anything like that. If it's just basic like this, and we can keep the pricing of those estimates under, forgive me here, under 35,000, then we can just use a quick version of this, because this is something that has to be done in 6 months, where the other one, you know, the full version of it that can go longer than that, depending on what the standard, the circumstances are. But if this is just like a quick remodel, it can definitely happen just like that.
Gotcha. And then do you have like a link or something for the standard so I can learn more about that, or a place to go on that?
Not really. I mean,
Okay.
I can give you a copy of this presentation if you want.
Well, so yeah, I know you're talking more about the limited version, but like the standard, like how much are you able to, like, I know you said 35,000 max for the limited.
No
Is there a
max.
max? No
Yeah.
max. Okay.
It's a minimum. It has to be at least 5,000, but there's like really no max. And it's just going to depend on how far the loan amount will take you. And so, I mean, keep in mind of the, like I was saying about how the numbers have to fit. If you're getting the house at, you know, not that great of a deal, it's not going to fit into the appraisal ultimately, you know? So remember, if everything in the neighborhood's selling at 250 and they want to build this up to a $400,000 level, it's not going to really
Right.
work because it's going to be, I forget what the word is for that, but they're going to overbuild for the neighborhood ultimately, you know?
Gotcha.
So, but if they're selling at 250 and you found a really, really, you know, beat up house that you can get for 50 to 100,000 and you can add 150,000 in repairs, 100% this can work.
And that's still an FHA as well?
Still an FHA. Yep.
Gotcha.
Because
And is
remember, you have
that
loan
still a
limits as well.
203K?
It's the FHA 203K. Yes.
Okay. All right. Great. Thank you.
Mhm.
Oh, last question about that. So I know the limited is they have to move in within 6 months. What about for the standard?
I don't really remember, but the work has to be completed in 6 months, and then they have to move in soon after.
Okay.
The same way they would on FHA loan, which is like 60 days, I think. The full, I don't know off the top of my head. That's why there's two of us. Lily would probably know the answer to that, but you know, I know some things, she knows other things, and together we make a complete situation.
Gotcha. And then, so another question pops up. So they purchase the property and then the renovations are happening. How does the mortgage get paid back? Is everything kind of lumped in because this is the quote and everything's based off
Yeah.
of that, or are they
All of
paying
that goes
for?
into the loan amount.
Okay. So it's all figured out and it's just like as if you're purchasing a house outright without the renovations. Okay.
Yeah.
All right.
Just
I
make
think
sure
that's all my
closing costs.
questions. Thank you.
Yeah, it's okay. It's okay. You know, you get more answers, they lead to more questions, like anything else. But there's a few more closing costs on a 2 or 3K loan. But hey, you know, if their backs are against the wall, that's far from a deal breaker. You know, it's just, it's giving them an option and saying, look, I'm not like, as a realtor, I'm not saying I would really lead with this if you're entering into a neighborhood, but if you are finding that a trend is continuing where all of the houses are within a certain range or they're all sort of at a certain age point, and if you're getting the feeling that they're sort of really getting disappointed and getting frustrated or that they're backing off there, you know, just to salvage the deal, you don't want them to walk away and not purchase. You can say, you know, after looking at 2 or 3 houses, you can say, okay, based on what the market has to offer to you at this time, this is an option that I think can work for you. You know, you're over, because if you're showing her a bunch of houses or the buyer a bunch of houses, they probably qualify for a mortgage. You probably have some idea of what their range is. And now you will have to change strategies just a little bit as far as your asking price and how to get those, the renovations to fit in as far as the price goes. But it can still work, especially if you have a desperate seller or a house that very few people want to buy. You know, because investors may go on the MLS and just find them anyway. You know, investors are, you know, wholesalers are super aggressive on these types of properties. They can be. That doesn't mean the seller will sell to them at, you know, whatever their formula is, you know, minus 70%, you know, 0.70 or 0.65 minus the repairs. They're asking a major discount with wholesalers a lot of times. That's why they're going direct to seller, sometimes through the MLS too, though. Anyway. Okay, guys, coming up to about the top of the hour, but I'm happy to answer any other questions if you guys have any more questions. Sure thing, guys. Probably do another class next Tuesday about, I don't know what, something. You guys want to, what do you guys want to take a class on? What are you guys curious about? What do you think you need to get up your IQ on about in the mortgage world? Anyway, if it comes to you, you can always email me. You can text me. Lily and I are happy to qualify all of your borrowers. We want to be your number one option in the mortgage world for sure. And so we are the #1 mortgage team here at La Rosa. We do more deals than anybody. We've done already more than 100 deals this year. And we are prepping for a killer 2021 for sure. And so from MLS to closing, fixer upper. What do you mean by that? Class on fixer uppers? Do you mean like fix and flip?
Yeah, that will be a good one.
Okay. So this would be closer to that class. This is one way you can use mortgages to do fixer uppers for sure. You know, because everything that we would use a renovation loan for, keep in mind, they don't always need to be in a fixer upper condition if you can get the house cheap enough. But if you have a fixer upper, using these renovation loans for sure is the way to go. You know, you want to do like a fix and flip class, that's a whole nother thing though. And I personally haven't done too many of those. I've only done one, so I'm not the best person. There's probably a bunch of other La Rosa folks here that have done way more fix and flips than I have that are probably better qualified to give that class. You know, but it's all, you know, comes down to you paying the right price and getting the things done, getting the renovations done, and then selling it for as high a retail as possible, you know. Anyway.
Brian,
Hey,
yes, please. Kindly, I missed the part that you said about marketing, that you can help us in marketing. Can you just repeat it for me?
So yeah, I do a Facebook ads class. So I've been doing that the last 2 Mondays. I'll continue that on this Monday again. So those are recorded for you also, if you want to sit through the beginners classes and get your account set up and familiarize yourself on. I think you've sat in my Facebook ads class more than once. I'm changing the structure of it because I have to do it through Zoom here and everything, and so it's a different structure than when I'm in the classroom with you and I can sit in front of your computers and play with your computer with you. But it's we're just going a little bit slower because of that. Next week's class, I'm either going to talk about Canva and graphic design or maybe something else. I haven't decided yet, but
on Monday, right?
There's an endless amounts of topics we could talk about when it comes to Facebook ads for sure. And it's hours and hours of classes, but if you're willing to sit through them, for sure, it can definitely yield a really good result, you know?
Okay. And you said on Monday, right?
I do those on Monday on Zoom at 12 o'clock. Okay. I'll advertise. I'll post that again to your My Agent page.
Okay, thank you.
Probably, I don't know, today or tomorrow or so.
About that to send you the KV core on my website. This is what I missed this part.
Yeah. Oh, I'm sorry. So if you want to talk about list reports, yeah. If you want me to add you to list reports and the mortgage app, I need your headshot, your KV core page, your socials and your contact info, and I can get you signed up for that today if you want.
I think I'm with Lily already.
Yeah, well, it would be through Lily's. If you're already connected to Lily, then you're already in there probably.
Okay, thank you.
Yeah, no problem. I mean, Cal, you've been working with us for years, Hal. I'm sure you're in there.
Thank you.
Got a couple.
For that marketing class, if you have lost the first two, do you have them like saved that we can go and see those before we can see the next one on Monday?
Yes, they are. I got to get with Ryan, but they should be. I'll post those also. Let me make a note for myself here. I'll make a note to have the links posted. I think at least one of them is in the My Agent page.
Okay.
You can get lost in there. It's pretty big, you know. But yeah, you want to get caught up on those as quickly as you can, so that when we move to the next level, you're not like, oh, what is this and what is that? The interface can be confusing at times.
Okay.
Okay. All right, guys. I appreciate you spending some time with me today. Next week we'll do some another class about something else. I'm not sure what it'll be yet, but I'll figure something out. So.
Okay. Thank you.
Okay, guys. You're very welcome. Thank you.
Thank you, Brian.